Give us an update on cloud bookings. It's a key metric that investors watch whenever we go through your numbers, and tell us what your outlook is for those cloud bookings going forward as well.
Yes, thank you, and good morning from Germany. Yeah, Q4 was a strong finish to a strong year 2019. We actually delivered on our already raised guidance for 2019. Cloud bookings were up 25% on a total year basis. Actually, excluding our infrastructure as a service business, it's even up by 31%. We see a high demand for Qualtrics, our latest acquisitions, as customers more and more realize that they also have to measure experience in the digital age. Our core ERP solution is ever strong. We actually expanded market size and are now twice as big as our next competitor. So also for S/4HANA Cloud, we have now in the meantime over 2,000 customers across 20 industries and over 70 countries.
Good morning to you, Christian. I want to get a sense of what happened in the world in the past 30 days. Take out the coronavirus for the moment. A lot of people use the language of stability, going through the worst. Phase one trade deal had shifted the narrative. Was there a demonstrable shift in the narrative from customers in the past 30 days?
I mean, the good thing about our business model is that it's extremely robust and resilient. So customers really rely on SAP software to globalize the business. Especially in the digital age, they have to invest into new software to adapt to new business models and drive automation via artificial intelligence. So this is why we are running our business at a global scale, quite resilient against any kind of geopolitical tensions and trade sanctions in the world. So coming also back from Davos, the sustainability topic was, of course, at the top of the agenda of our C-level. But also there, SAP is actually ahead, not only for setting ourselves up to be carbon neutral by 2025, but also our next agenda is we will also help our customers to become a more sustainable company by measuring their carbon footprint and helping them actively to drive action.
Christian, what conversations are you having with Elliott management at the moment? Are they satisfied with the steps that you're taking right now?
We're having conversations with many of our most important investors, and they are very happy with the performance SAP is delivering. And of course, it's also worthwhile to listen to them, to seek their feedback, and of course, to do the best what is in the interest of SAP. But overall, our investor base is extremely happy with the performance of SAP.
Well, what is the pressure? Because there was a promise of a special dividend, €1.5 billion. Is that enough to get Elliott off your proverbial back?
Yeah, so in the weeks to come, we will evaluate, with our supervisory board, what will be our final dividend for 2019. And of course, given the results, you can actually expect an increase of the dividend in 2020. Plus, we, of course, will do the share buyback as committed. And yes, our investors are extremely happy with the plans we are having, both for the dividend and for the share buyback.
Christian, with respect, you keep saying that investors are happy with the business, but SAP is actually trading at a discount to a lot of newer enterprise cloud players, not least ServiceNow. How do you explain that discount, and how do you plan to change it?
I mean, SAP has, two business models. So first of all, we have seen also again in 2019 a strong growth in our core business, leading with S/4HANA. Second, we see accelerated growth in the cloud. This is also what drives the multiples. And there also in the years to come, we have many more solutions with the integration of our acquired assets. We are even sure that we can double down on cloud growth. And this is also what will drive the market cap and the multiple of SAP.
When you look at the numbers, the promises that were made were to triple the cloud revenue by 2023. What is the biggest threat to you achieving that? Is it the outperformance of Salesforce and Oracle stealing market share? What's the biggest headwind to that promise? And do you stick to that promise?
I mean, coming from 2019, we are coming from an extreme strong foundation. We are actually expanding our market share in ERP. We are now twice as big as our next competitor. Also in our other cloud lines of businesses, of course, first and foremost, Qualtrics, we are seeing high growth. And in the years to come, SAP is actually just starting to exploit the synergies coming out from our acquisitions by integrating the products and selling them into our installed base. And also by looking into our pipeline for 2020, we are staying extremely confident to also hit our ambition for 2023.